Morning and how do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome to today's briefing. We're looking, as we did on Friday, the Silicon Valley Bank Financial Group. They're now closed. This is the last data point. The bank is closed. It was deemed to be insolvent, and they're no longer open for business. And this last data point here, I believe, is last Thursday. Oh, no, it's Friday, March 10th. That's the end of SVB. That's not what we're here to talk about. We talked about that alert on Friday. It's turning out to be true. While this decline is 60%, keep in mind, this is not an ordinary bank. These people don't lend them mortgage holders or small businesses, things of that nature. They invest in new technology. They're a venture capitalist bank. So they're a unique boutique bank. Nonetheless, they are the 16th largest lender in the United States of America. When they go bust, that's going to send alarm bells. They went bust, by the way, on its surface, for the classic bank run reasons, fear. There's nothing new about that. It's been going on for millennia. The particular nature of their accounting and their balance sheet is a little bit arcane, but suffice to say that they were caught short. They were holding way too many assets that lost too much value, i.e. government bonds, and the interest rate hike. As you know, we've been talking about that short for a year. It's been a great short. These guys got whipsawed in that short. Their balance sheet was largely represented by those declining value in assets, and so they were caught short. The moment they announced that they were going to plug the hole in their balance sheet with a equity offering or even a debt offering, it became clear that they were in deep insolvency territory, and the rest, of course, is history. That is not what we're here to talk about. We're here to talk about this. This, ladies and gentlemen, no, not this. This, if I find it, under financial, is what we're here to talk about. This, as you can see, as you almost can see, this is a agglomeration of all of the financials we hold. And these are the world's heavyweights. Lloyd's, Societe, Standard Charters, Morgan Stanley, Hong Kong Shanghai Banking Corporation, Deutsche Bank, Barclays. You get it. These are the heavyweights of international global finance. And this is what they're all experiencing. In the toilet for Goldman Sachs. JP Morgan in deep trouble. Lloyd's down. Standard Charters down. Deutsche Bank, that's not surprising. They're going to be magnified because anything they touch always goes right into the toilet. But Royal Bank of Scotland down significantly. Citi, the colossus of them all, one of the giant colossi of money center banking. Wells Fargo, deep trouble. You get the idea. And so what this means is the fear is taking hold deeply in the financial markets. We expect bank sell-offs to continue, despite the obvious benefit that accrues to banks due to rising interest rates. Doesn't matter. Fear trumps that calculus. And what we are warning about is a potential spillover into the general stock market. As fear takes hold in the banking sector, money is likely to withdrawn as well from the equity markets. So, ladies and gentlemen, that's our brief for the day. The fear is continuing on the SVB fallout, which is now defunct and is no more. It's threatening at least the stock price. I won't say it's threatening the solvency of any of these institutions, but it's surely threatening the stock price. And for us as traders, this is an opportunity to extract money from the markets in what looks to be a fairly solid trade. Beware, there's risk here, ladies and gentlemen. This is the capital markets, and risk is precisely defined as the probability of the unexpected occurring. And occur it does. So you should only be trading with money in these markets that you can afford to lose. But with that said, the banking sector is looking weak. It's taking buffeting winds from the SVB fallout. First Republic Bank is now in the sights as the next contender for weakness and insolvency leading to bankruptcy. So, ladies and gentlemen, that's going to do it for now. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.